Hi everyone, my name's Darryl Panes, CEO at As Good as Gold Australia. This evening, once again, I'm joined by my brother Brian and partner.
Thank you, Darryl.
At As Good as Gold. And tonight we have Alasdair Macleod, Head of Research at Goldmoney. Good evening, Alasdair.
Good evening, Darryl. Good evening, Brian.
Good evening, Alasdair.
Alasdair, I believe that the world's economic position remains dire, to say the least. And it's interesting, in this situation, those who are invested in precious metals very often think that, or assume that metals should head north at a rapid rate of knots. And they wouldn't be really all that wrong in possibly thinking that way, because it will happen at a certain time.
Certainly during the early stages of buying some precious metals.
Yeah. So I looked at this and I thought, okay, gold and silver prices at the moment and for the last, over the last week have dipped a little. And so we've had a few people who have made contact with us and said, what's going on? Shouldn't they be going north? So you sit down and you analyse this a little, as I'm sure you do on a very regular basis. And so we look at the BLS, Bureau of Labour Statistics, and they confirmed that there were 517,000 new jobs in January. That's double what the expectation was. But here's the ADP, Automatic Data Processing Inc., confirmed 106,000 new jobs. There's a big difference between the two. And the ADP, interestingly enough, by the way, handles the payroll. This blew me away. A fifth of all the private sector employees in the United States of America.
One fifth.
Mm-hmm. So it's a much larger group than the sample that the BLS uses.
Yeah.
Now,
who's right?
yeah, well, that's right. So who's right here? But it seems it's easy for the BLS, these guys are in the habit of doing this, to massage the data with questionable adjustment, should we say. Right?
Yeah, they've done it before.
So for this time, it seems that a population adjustment by the BLS did the trick. That was really what it was all about. So the supposedly strong jobs report meant interest rates are headed higher and precious metals were really hit hard. So it's a fine line, isn't it?
Yeah.
You know, one report like that. Now, my question to you, Alasdair, is this. Your thoughts, I want your thoughts on the ongoing massaging of these numbers, which is very regular, and the corruption in the system. I mean, my thoughts are, in the end, the result is inevitable. History tells us that, and you just end up digging a bigger hole for yourself. But I really would like your thoughts on this.
There's so many questions in there. The first thing I would say is that statistics can prove anything you want other than the truth. So that's the way I look at statistics. I just don't know the answer to how they've bent them, whether they're honest and getting it wrong, or whether they're dishonest and trying to spin us a line. I have no idea whatsoever. I just take the general view that all governments lie. You could probably justify it and say, they tell you their version of the truth, if you like. And so, we have to really continue or run our lives on the basis that we make our own decisions and we don't actually listen too severely, too closely to what governments try and tell us. And that goes with the statistics that come out of, the Bureau of Labour Statistics, and from, when you're looking at CPI numbers and all the rest of it. None of it is relevant, actually, because the thing that really matters at the end of the day is they are diluting the purchasing power of the currency. Now, that can be absorbed by public opinion, let's say, continuing to have huge faith in the currency. And instead of spending the extra stuff that comes in, saving it, saying, well, we're not going to chase the prices. I mean, this is what happens in Japan and China, for example. Got very high savings rates. But, the problem, the big picture problem really is that people are beginning to really lose confidence in fiat currencies. And I think that the evidence that, the whole of the cryptocurrency industry, which is all founded on a bit of a myth, really, that's coming in, the fact that evolved and actually we have it, and it's been so popular, it has its roots in a fundamental distrust of what governments are doing. So I think that's roughly where we are in this whole game. You touched on interest rates rising, driving gold prices down, and so on. We have markets now which are completely dominated by people who do not understand markets. They are Keynesians. They do not know how markets operate. They do not understand the relationship between money and credit. I mean, the ignorance in markets is just mind-blowing. You only have to go back to the 1970s and look at what happened. I mean, we went into the 1970s with interest rates. US interest rates were around about 6%. Gold was $35. We came out of it with gold at $850 at one stage, and interest rates at 20%. So how is it, why is, do tell me why it is that higher interest rates drive down the gold price. The only reason it happens is because everybody believes it, and they don't understand the relationship between money, which is legally gold, and credit, and prices in the market. I mean, they don't understand the whole thing at all. And this is actually, Darryl, what we're dealing with. We're dealing with widespread ignorance, which goes well beyond the governments. I mean, the governments prey on this ignorance because they want us to accept their story. And we're in a position where if we're investors in the market, we have to accept their story or suffer enormous losses. We don't want to learn the truth. This is, this would be a horrid thing. The idea that, in fact, our ownership of US treasuries or Australian treasury stock or whatever is actually wildly overvalued. We don't want to know that message. Come on, because if that's true, what happens to our equities? They're down the pan as well. Yeah. So we don't want to know the truth. And in that sense, we are conspiring with the whole of this mess. And the only way to get out of this is to understand the basis of the conspiracy, dismiss all government statistics as being basically trying to promote a government inspired message, and understand that there is only one escape from this fiat currency fiasco, and that is to own real money, not as an investment, but as something you will end up spending.
Very interesting. I couldn't help but think of Egon von Greyer's at the time that Alasdair was speaking there with his reference to politicians. And Egon, of course, said he just went one step further, one could say, although I think Alasdair said that all politicians lie all the time. I mean, this is what we are confronted with, but we're accepting it because for most, it's a really valid argument, because we're accepting it because anything other than an acceptance places us in a position that we don't want to know about. Yeah?
Yeah, very, very true. And it's been throughout his history for politicians wanting to get re-voted in. They will tell any sort of a story to make it believable.
The only thing I would say, sorry if I can interrupt, about politicians lying. I think lying is a sort of pretty extreme statement, if you like. I know exactly what you're meaning. But I mean, to my mind, the one memorable moment that came out of the Spycatcher trial. Do you remember that one back in, I think it was the 1980s, when there was a chap, I can't remember his name, who worked for MI5 in London, and how he described the goings on. And he went out to Australia and he stayed there. And there was this Spycatcher trial. And there was a senior member of the civil service who under cross-examination, admitted that what he said earlier, what the government said earlier, wasn't quite the truth. They said we were economical with the truth. And I think that probably describes the situation. The relationship between government statistics, government statements, and us, poor little us. I think, we're being told stories which are economical with the truth. I prefer that phrase, I think, Darryl.
Okay. All right, I'll keep that in mind.
I would say from now on, distorting the truth.
Distorting the truth, yeah.
Oh, look. I must admit, when Darryl brought this question up and earlier on, and we discussed it and whatever, and I said, I think I know. There's another story out of Zero Hedge, and which I looked it up, and it was done about 2 or 3 days ago. And Zero Hedge said, because they talk about seasonal adjustments. I know what you just said, Alasdair, but I've got to say this to our audience here. Seasonal adjustments were done, and that's how they came up with this 517,000 jobs, right? But at the same time, full-time jobs didn't go up at all. Actually, full-time jobs went down by 10,000. So when you have a look at the seasonal jobs, these people could be earning or working 2 hours a week. All right, they're employed, or they're off the unemployment benefit, whatever. And so this is how they get to their 517. Also, what came from Zero Hedge was that unadjusted figures. So forget the seasonal adjusted. Unadjusted figures were in the last 10 months of this year, from end of January, go back 10 months, minus 2.5 million jobs not created, minus 2.5 million. So I made a note on my little question mark here. I said, because I've watched a lot of Westerns in my time and the American Indians and things like that, and I said, I read in inverted commas, I think the World Central Bank speaks in forked tongue. So I know that they distort the truth to suit themselves. They really do.
Indeed.
Oh, dear. I have another question. This one is about debt. In fact, raising the debt limit. Alasdair, President Reagan came into office. The US debt limit had to be raised to over $1 trillion. 8 years later, the debt was $2.8 trillion. Today, in 2023, the US government is talking about raising it from $31.4 trillion to obviously a considerably larger amount. We see this as hypocrisy and fraudulent, because when using fiat money, debt is impossible to reduce. Your thoughts on how long this can continue before there is a total collapse of the fiat currency system?
I don't think it's going to be all that long. It's a bit difficult to sort of say that there's a definite level at which, the whole thing topples over. That's not really the way the world works. But there has been something else, which is an external factor, which I think will be very, very relevant. And that is the situation in Ukraine, which is likely to kick off again on an enhanced scale. I mean, everybody's been talking about sending tanks to Ukraine. They're now being shipped there and all the rest of it. And they're due to arrive there later on this month, maybe early in March, whatever. There is no doubt that the word in intelligence is that this Ukrainian situation is going to kick off again. The ground is going to freeze over. It's going to be wonderful for tank warfare again. Remember, it was February the 28th, I think, when Putin invaded Ukraine. And since then, he's had a sort of tactical withdrawal. He's moved out of places which aren't worth defending. But there's no doubt that he is reforming. And there is no doubt that the West is very keen to finish this off. And by finishing it off, I mean, the poor Ukrainians, they're in that horrible phrase. They're in the meat grinder, which it sort of brings just horrible images about the whole thing. But there is no doubt, and there's something, I'm digressing slightly, but a former Prime Minister of Israel, a guy called Bennett, said something earlier this week, and that was that he had gone to see Putin, and he felt that he had the basis for a negotiation between Putin and Zelensky to, defuse this thing. And he was fairly convinced that he had this basis because he talked to both Putin and Zelensky. But the whole thing was jumped on by the NATO alliance, particularly Boris Johnson, and also presumably the Americans. So I would think that Boris is probably the mouthpiece, if you like, for American policy on this. They don't want this, Russia to succeed in the Ukraine. What they're particularly concerned about, it transpires from other information, is the position of Germany. They don't want to see Germany become part of the Eurasian industrial revolution. I mean, there's no doubt about it. The German economy would have an enormous role to play in the industrialization of Asia, because it's a productive economy. It's not an economy based on services and financial services and stuff like that. So, but as far as the Americans are concerned, if Putin gets his way, Germany will move in that direction, and I have no doubt they will. Well, they would if it happens. So, in effect, the Asian hegemons will be running everything from Vladivostok to, if you like, Trafalgar, the far west of Europe. And that's really what the battle is about. So this is going to be a major battle. Now, the relevance as far as we're concerned is that this is likely to drive up bond yields. It's likely to drive up the gold price, energy prices, and all the rest of it. And this is only going to kick off in what? We don't know the timing, but 2, 3, 4 weeks. I mean, if it's the same as last year, that's the sort of timing we're looking at. And this is going to fundamentally change financial markets. And the other thing that is clear, if you go back to the 27th of December, Sergei Glaziev, who is, you will recall, the guy who's designing this new Eurasian Economic Union trade currency, has actually come out and quite plainly agreed with what I've been saying. And that is that a new currency has got to be based on gold. I mean, he said that in a business article. This is not, sort of state disinformation. This is the guy in charge of the whole thing actually telling us what he plans to do. So if you're going to put the trade settlement currency, which is what he was really involved with, onto a gold standard of some sort, then it naturally follows that you've got to have gold standards in other currencies. So you can see now why it is that the Saudis have been very comfortable with the idea of taking renminbi, because they will have been convinced behind the scenes that the currency that they will receive for their trade surpluses, which is actually probably in the region of, just a few $1 billion equivalent. I mean, we're not talking huge sums because there's going to be massive offsetting inward investment from China. But I mean, those balances, they've obviously been given comfort that the currencies that they will receive instead of petrodollars are an improvement on petrodollars. So, or at least as good. So you can see again that the evidence is mounting that part of the world is going onto a gold standard yet to be defined. So as to timing, once, I would have thought that, if you put yourself in Putin's shoes, the timing to do this is actually set by the Ukrainian situation. What I would plan to do, I won't say he would necessarily do this, but I think I hope people will see the sense in my argument, is that I would kick off, get back Donbass and, the eastern Ukrainian bits that I want. And then maybe concurrently or maybe slightly afterwards, I would announce my currency plans. And, this would be against a background of soaring energy prices, soaring gold price, and all the rest of it. And that basically would bankrupt the Western fiat currency system. So this could actually happen very, very quickly. I mean, it's fascinating that this is, if you like, an international foreign exchange problem, not where foreigners sell dollars to buy euros or to buy sterling or to buy Aussie dollars or whatever. It's, they're basically getting out of dollars in order to buy currencies or to buy gold or whatever, but just get the hell out of dollars or go into another currency, which is gold back or has been indicated that it's going gold back. So, and of course, the last people to realize this, and this is all the commentariat which we've just been ripping off, saying how ignorant they are. The commentariat in this sense are basically American residents. They think that us foreigners will want the dollar forever. They can only think that this is the global reserve currency. Okay, we can see that there's a resurgence or, the use of the Chinese yuan is increasing and all the rest of it. But, if you think this is going to knock the dollar off its pedestal, forget it. It's not going to happen. That's what they're saying in America. And that's what all the commentators are telling us. This is rubbish because actually, when you go on to a gold standard, what happens to your currency reserves? You get rid of them. You don't need currency reserves. And if we go back to the middle of last year, Putin at the St. Petersburg International Forum, whatever it's called, just raised the question. He said, and there were 81 governments represented there, official delegations, that is. He said, why hold dollars and euros when their purchasing power is going down by 8%? That was, that was the sort of indicated rate of CPI inflation at the time. When they're going down at 8% and they're not rewarding you, compensating you for it. There's no point. And furthermore, the West, if they don't like you, will weaponize these currencies and make them valueless in your hands. And why store gold in these countries? These really referring to London with the New York Fed and also Paris and so on. So in other words, he's actually primed everybody for this. And we know that he's now got the switch, if you like, to turn the dollar off. And that's the reality of the situation. Now, just look at it from the point of view of the US government. They have got a deficit, and the deficit looks like it'll be increasing, whatever the Congressional Budget Office says. And the reason it's increasing is there is no doubt that the US economy is slowing. All the indications are that credit is being withdrawn from the real economy. I mean, we had the senior loan officers, survey, where it was unequivocal. I mean, they're basically saying, the situation has deteriorated. We're no longer making, the loan conditions are tightening, is the way they put it. In other words, we're not making any more loans. So we can see which way this is going. So the US government is going to be trying to raise significant quantities of funds through the US Treasury market at the same time as the foreigners are liquidating their positions and not only liquidating, but in the past, the Americans have relied on foreign purchases of US Treasuries to fund their deficit. That's going to go the other way. So what's going to happen? I mean, it's quite simple. The yields on the US Treasury market have got to go through the roof. So, the whole thing fits in with a collapse of, if you like, of the whole of this fiat currency system, where governments find that they can't finance themselves at the rates which they think are reasonable. They find that they just got to pay up and pay up and pay up. What's the alternative? Well, the alternative is to stop paying out welfare, stop having foreign expeditions, military expeditions, in the Ukraine, whatever. I mean, just stop this excess spending. Are they likely to do that? Are they hell is like? Politicians aren't elected to control spending. They're elected to spend more. There's a whole system to be overturned. And it's not going to be a pretty sight. It really is not. Not for anyone in this fiat currency Western alliance system. But I take hope out of this because I think if Asia goes on to a reasonable and credible gold standard, then actually they're saving the world from something which would otherwise be far worse. And it will drive us sooner or later to adopt the same sort of measures. There's another little interesting thing happened. I think it was earlier this week, last week. We start getting stories that the Brazilians and the Argentinians and a few others are talking about setting up a new currency. And of course, everybody laughs at this because, their track record of, inflation, their currencies is, completely laughable. But actually, if you think about it, why are they doing it? The answer is that they are tying themselves in with the Shanghai Cooperation Organization. BRICS, the B is Brazil. Yeah. Here you've got Latin America. They're voting with their feet. They're saying, look, our future is Asia. It's not, it's not those guys up north from us, the Americans. So they need to construct a trade currency which will allow them to participate in this. So this currency has got to be a sound currency. That's what they're planning to do. Don't laugh at them. They're doing something actually very, very serious. So, everything is pointing that way, and suddenly it's happening very, very rapidly.
Well, to a lesser degree, surely President de Gaulle in 1965, when he put his hand up and said, I do not trust the American dollar, I only trust gold, sent a warship to the US with a bunch of currency on board, and came back with gold. And that really set a precedence there, didn't it? Because then you had a number of other countries who also followed suit. And we know what Nixon did, of course. He had to take America off the gold standard because he didn't have enough gold to support the demand that was being placed on him. So it can happen as quickly as that, can't it? And in this case, it's Putin at the helm and it's BRICS. And we know what happened to gold and silver in that period, of course, 71 through to 1980, $35 an ounce to 800. So, but that's all it took to get it started, wasn't it, Alasdair?
No, that's absolutely right. And always the way to look at this. I mean, look at it again from the central bank's point of view. You print currency. Okay, you can do that, flick of a switch. So, when you buy gold, it's the price of gold that goes along like that, okay? But it's your currency that goes down.
Sure.
So what do? Print currency, buy gold. I mean, it's magic. And this is why we have pretty much record acquisition of gold. It is, if you like, the global central banking community's expression of the change in its faith in its own system. So, we've got to, it's happening. It is happening before our eyes. But I think, I would like people to begin to understand that it's not the gold price rising; it's currencies going down the pan. That is the key thing. And of course, as soon as on a domestic basis Americans realize this, then they will dump the dollar for anything. They will. I mean, the reason they go out and buy things is to get rid of the dollar. You don't buy things because you need it. You just want to get rid of the dollar, and that's the sort of crack up boom. That's the end of the life, if you like, for the currency. What we're seeing, or what we will see in the foreign exchanges, in my view, triggered or about the same time, I suspect, as this new Ukrainian thing is beginning to go, is you will see foreigners at the institutional level and at the government level realize that, gold is just doing that. It's the currencies that are going down. And if you want to preserve your position, get rid of the currencies. So they will sell currencies for anything. And I think that's what's going to happen. We could even see China beginning to not only buy gold, but and incidentally, this sort of acquiring 15 tons or whatever, it's all a bit immaterial. But I think they'll be ramping up their commodity reserves. They'll be adding to their copper, they'll be adding to their oil, they'll be adding, and so on. And that's the way they'll get rid of their dollars.
Couple of points. Yeah. I will be adding on to what you're saying here, Alasdair. So a couple of points I just, listening to it, the conversation. And I really do feel that the US citizens will wake up, but they're slow in waking up because they've had it so good for so long. And I'm thinking about, we talked about raising the debt limit, and Ronald Reagan, when he was in power, or certainly at the beginning, it was about 800 billion, and the limit went up to $1 trillion. But you think about from 1980, Alasdair, right through to now, 1 trillion to 31.4 trillion, what it is today. Are the Americans' standard of living any better off? For all that excess currency, are they any better off? And I'd say no, they're not. In fact, I think they're worse off, because I've never seen so many tents on the streets out of Los Angeles. It's just unbelievable. Anyway, so there's that point. The other point is that, you've quoted how quickly this could come. I think I might be out of date, Darryl, because I've been saying to our clients 2025, 2027, it could easily be another year prior to that. So, guys, look out. When China and Russia start moving along with their gold standard, or having their surpluses paid in gold, or balances, I should say, paid in gold, that's something to really look out for. Just another point, and this is more or less a new question, but I just raised some figures. In 2022, last year, the physical demand, this is from the World Gold Council, so these are not figures out of my head, they're from the World Gold Council. 2022, the physical demand for gold bullion grew by 18%. And leading the way was bullion purchases from retail investors. Unbelievable. That's never happened before. Central banks bought 1,136 tonnes in the year of 2022, which was the most since 1967. Now, I'll tell you what I see is a physical, I'm going to bring up a physical expression here. I brought along with me an Australian $100 bill, but these could be US $100 bills. But there's 18 of these things, because we have in Australia very nicely coloured little ones that are very attractive. But, it's got 100 written on it. Now, that 100 could be any figure, but there's 18 of them. And I brought 18 of them because if that's a US $100 bill, that's how much it costs to get one of these things here, which is an ounce of gold. 18 of these, one of those.
Yep.
$1,300 US actually cost to get it out of the ground. So that is to find the metal, to dig away in there, start drilling away, excavate it all, get it up to the top of the surface. It costs $1,300. They call that all-in sustaining costs to get this stuff out of the ground. Well, they need the extra money to actually find new gold. Otherwise, all there is at the end of the day for a mine is a hole in the ground. So they have to have extra money, profit, to look for more. But I come from manufacturing. Darryl and I come from manufacturing. And when we left manufacturing, our average manufacturing companies in Australia were working on $100, $110 an hour, Australian dollars. And I envisaged that, look, worldwide, in America, wherever gold's produced, let's say it's $400 an hour for mining equipment to get, to use. Yeah. They're big machinery, so $400 an hour as they charge. Well, that's 3 hours of labour or costings to get that 1 ounce out of the ground. 3 hours.
I know where this is
at
going.
$400 an hour. Now, there's 18 of these things, right? You've seen, Alasdair, you've seen a printing press, certainly a money printing press. They're ripping away like this. 18 of these things would take, in my opinion, 2 seconds.
Yeah.
2 seconds. As against 3 hours.
Or less.
Or less. What has value? What is value? What is our audience? What has the value? That comes out of the ground is in minute quantities, or printing of these darn things at 1,000,000 miles an hour. So that's why gold is valuable, and that's why for 5,000 years it's been a gold standard. Now, my question after all of that, Alasdair, what is your line of thinking regarding the paper price of gold holding up? You know, we have talked about it on the edges here, but the price of gold is in paper gold. The price is paper gold. How much longer do you think this is going to hold up?
I'm not quite sure what your question is. Are you looking at the relationship between the paper market and gold bullion, or are you? I mean, is that
yes,
the
basically about it? Yes, the paper price and the physical price.
It's a good question. I think one of the reasons that the gold price got hit last week was because the bullion banks needed to get their position straight. I mean, the Bank of International Settlements has squared its book, for example. It knows that the risk is, it's having, if you like, paper gold as opposed to physical gold. Because, I mean, the way the Bank of International Settlements works, and the way, in fact, the whole of the gold leasing system with central banks providing liquidity into the market, the way that works is they swap physical gold for paper on the promise that it will be reversed at a future date. So, at some stage, that relationship, I think, it's certainly going to get very, very stretched. But what we are seeing, I think, is an anticipation that being short of paper gold and having to cover that could actually be a very, very dangerous position to be in. So that's why they've bashed it. And I mean, we saw on COMEX, I mean, one of the problems we have with this is that we're doing quite a lot of guesswork because the major market is in London. We don't get the statistics until well after the event in London, if we get them at all. COMEX, gives us a better window, if you like, on the world. But it's only 1/8 of the size of London in terms of trading. So with that caveat, we can see that the speculators, the managed money side, they were not overly long of gold when it was up at 1860, 70, looking at my chart. Yeah, something like that, 1860. They weren't overly long of it. I mean, the average long position, which we can take as the neutral position for the managed money category, is around about 110,000 contracts net long. It only got up to something like 86, 89,000 contracts. Now, that's not an overbought market. I don't know what's happened is that they're now failing to produce the commitment of traders reports because of some sort of, there's a glitch or
interesting.
There's a virus or something which has screwed it all up. So we don't know actually what the figure is. But if you look at the open interest on COMEX, it's absolutely collapsed in the gold contract, which tells me that basically it's pretty oversold. They need to get their positions straight. I mean, I think that we're probably still looking at something like in the swaps, the net short position being something like $20 billion, $28 billion, something like that. It's rough, an average of something like $1 to $1.5 billion per trader, per swaps trader. That's their short position.
Yep.
And that's real money. I mean, I know we're used to talking in trillions now, but that, believe you me, that's still real money. So I would say that in a sense, this setback in the price is actually nothing to do with the values of gold as you were trying to illustrate relative to the values of paper, which cost nothing to produce. It's actually got a lot more to do with the realization that we've got a problem, Houston, when it comes to the relationship between paper and physical gold. Now, how long it takes to recognize that or to realize, I don't know. There's another thing that you said, which is very interesting, Brian. You said that demand for coins and bars and so on and so forth from the public has increased substantially. I'm sure that's right. I don't know off the top of my head, but one thing I do know is that interest in ETFs, physical back ETFs, has actually declined over the last year. It's only begun to pick up a little bit in the last month or two, which suggests to me that if you get, if you like, an increase in demand for physical ETFs, as people begin to understand, oh, hold on a minute, gold is going up, we better have some. I mean, these are investors, which is silly, but anyway, that's what they're doing. You can see how that's going to put a huge squeeze on the system because there isn't the liquidity there. Yeah. Russian gold is not being supplied into the market. China's gold never leaves China. I think that, that sort of demand is basically taking all gold out of America, pretty much. So, we've got this situation where there is really very little physical liquidity around, and it just cannot take a resurgence in demand from ETFs. So that's going to be an interesting one to watch. And I note that the biggest of these, the GLD, which is sponsored by the World Gold Council, is getting another custodian in the form of JP Morgan. Why? Look, I mean, the whole point about custody gold is that it's not the property of the custodian. You don't need to have multiple custodians to sort of spread the risk somehow. I mean, that's complete rubbish. I get a bit suspicious about these sort of machinations going on in the background. Not only that, but I mean, we saw JP Morgan's sort of bullion department. Various traders have been found guilty of criminal acts in their trading and so on and so forth. And one of these guys was actually on the LBMA Council, for goodness sake. And the World Gold Council says, oh, these fellas are lovely. I mean, look, JP Morgan, the biggest name in the industry, has got to be the blue chip of the blue chip. So yes, they can act as our custodian. What? Riven, absolutely riven with conflicts of interest and a track record which has had their traders sentenced in criminal courts. I mean, come on. There's lots of shenanigans going on here. So I can't answer the question as to whether, and at what point the physical market is going to actually start driving the price as opposed to the paper market.
Right.
But it's an interesting question, and it's one I think we watch to evolve, I think, particularly as the Ukrainian conflict begins to perhaps drive up energy prices again, perhaps drive up the gold price. I mean, remember that this time last year, I think from around about mid-February, gold price was about $1,800. And by March the 8th or 9th, after the Ukrainian thing had kicked off, it was up at 2,070. The oil price had run up, WTI ran up to $120. I find it hard to imagine that we're not going to get a similar shock in the commodities and energy markets that we had exactly a year ago. But this is kicking off, and who notices this? Who's looking at it? I mean, I find it unbelievable, that here we are listening to people like Jay Powell saying, "Oh, I think that inflation's coming down. It's perhaps not quite yet, so we've got to, and we can see that there's a recession probably around the corner." I mean, come on, does this matter? It really doesn't. It's a load of rubbish. There's a far bigger elephant in the room, which nobody notices.
Yeah, there certainly is a far bigger elephant in the room nobody notices. Excellent answers. I have a question here, and then Darryl will follow up and finish off. I have a book of quotes. Whenever I do a lot of reading and I pick up quotes from different, whether it be presidents of different countries or speakers of different countries, and they come up with a one-liner that's really good. But this one has been in my book for some time, and I want your impression of what it means. So it comes from the Rothschild family. Approximately, it says 1863. So not 1963, 1863. So here's the quote from the Rothschild brothers of London in 1863. "The few who understand the system will either be so interested from its profits or so dependent on its favours that there will be no question from that class." Can you enlighten me on the meaning of that quote?
I think the meaning of that quote is nobody actually understands money apart from a few of us, Rothschilds, and maybe some of our competitors.
Yeah.
But it also goes back to an earlier quote. I don't know which Rothschild it was, and it's probably been bowdlerized anyway. I don't care who makes the laws as long as I can manage the money.
Yeah.
That's what I would take to mean by it. I mean, as you know, banks are dealers in credit. I mean, to understand banks, they are dealers in credit. They are not dealers in money. Money is something else. Credit may be based in terms of its value on money, and that's a matter of public perception. And it's the job of a government to ensure that that perception is in place. But as far as the bank is concerned, it's a wonderful business. Out of thin air, you can say, right, Darryl, I'm going to lend you $1 million and I'm going to charge you 15%. You say, thank you very much. And meanwhile, I credit the other side of my ledger with $1 million. Interest rate 0. I've just created a loan which is going to pay me 15%. I mean, what's not to like? I mean, this is lovely stuff. I don't need to use my own money. I can just create the stuff out of thin air. Credit, that's what it's all about. Banking is immensely profitable. Obviously, there are risks when it gets a bit excessive and things start sort of falling over a bit because, everybody's got in the act, and there's and credit is being used for speculation and all the rest of it. So bad debts become a problem. Then okay, there is a problem. But I mean, other than that, I mean, particularly if you can get governments to bail you out every now and then. I mean, it's just lovely stuff. It really is. Because governments don't understand it either. I mean, the central banks, I think some central banks do understand it. But I mean, quite honestly, when I look at the statements coming out of some of the world's senior central bankers, I think either they are being economical with the truth, if I can say that, or they haven't a clue what they're talking about. Yeah. And I suspect, unfortunately, it's the latter. I think I'd rather that they were uneconomical with the truth and I would sort of have the background comfort that they actually do know a little bit about what they're doing. But there we are.
Yeah. No, well answered. Thank you very much, Alasdair.
Well, talking about bankers and their attitude towards gold, I've just got a couple of comments here that I think are really interesting from a gentleman by the name of Peter Zollner. So head of the banking department of the Bank for International Settlements, spoke at the Global Precious Metals Conference of the London Bullion Market Association held in Lisbon, Portugal, just recently. And this is what he had to say about gold. This surprised me somewhat, because it was all super positive. He said, gold is durable and largely imperishable, and nobody's liability if you hold it physically in your vaults, which frees it from default or counterparty risk. Okay. He went on to say, unlike currencies and debt instruments, which are claims on foreign governments or institutions, gold kept in your vaults isn't subject to political manipulation or monetary and physical policies. He went on to say gold has proven to serve as an inflation hedge. And then he said, most importantly, it is widely recognised for its potential value in highly adverse scenarios. This is the so-called war chest value or tail risk hedging value of gold, which is difficult to capture in standard quantitative analyses. He finished by saying, gold should not be seen as a dormant asset in a vault for the rainy days. Gold is an asset which offers opportunities in the financial markets.
He spoiled it up until then. I was sort of more or less with him, but he spoiled it then.
But, to some degree. But isn't it interesting that he would speak so positively about gold? And so I'm thinking to myself, and we've always said this, Jim Sinclair has said this, become your own central bank. I mean, the BIS is the bank of all banks in real terms. So if it's good enough for them, if they think so strongly about it, they don't generally speak positively about it, but they own it for obvious reasons. So my question, I guess, is that if you could just share with our audience tonight, just share with them why it's so important, more than ever before, to own gold right now. Alasdair, if you could do that.
First of all, about that gentleman's comments at the LBMA conference in Lisbon. I mean, I think you have to take into account his audience. So that might have coloured his remarks a bit. And of course, I mean, this bit about, just don't sit on it, use it. I mean, this is manna to the LBMA's ears. This is what they want. They want the liquidity. They want to be able to do swaps and things like that. That has got to stop. So on that bit, I would say he was just pandering to his audience. The message I would try and get over is understand the financial war that's going on behind the scenes, behind the Ukrainian scenes. This fight between the United States and its Western allies on the one side, and the partnership between China and Russia on the other. We're looking at countries now moving, I mean, complete countries in terms of their foreign policy, moving out of our comfortable Anglo-Saxon sphere into the new Asian sphere. And there are a number of things that are driving this. I mean, they're very big forces. I just think, if we tell the Saudis, we don't want your oil in 10 years' time, what are they going to do? Are they going to sort of just say, oh, okay, we'll just shut down our refineries, as and when the demand withers? No, of course not. They're going to go to China and India, who are quite happy to take this stuff in because they need the energy, apart from anything else. The industrial revolution for this century is going to be an Asian story. It's not a European story. It's not an American story. We're in decline. And anyway, all our manufacturing stuff, with the exception of the excellent Germans, we've exported elsewhere. We don't want to dirty our hands, except doing very high-tech things, most of which means that we sit in offices, which is lovely. But we don't go out and shift things and make things so much anymore. Most of that's done by foreigners who are perfectly prepared to get dirty and sell it cheap to us. So, we've got an arrogance here about our economies, which is not matched in Asia. Asia has got enormous potential. You're talking about 3.8 billion people in the Shanghai Cooperation Organization, BRICS, and also the Eurasian Economic Union. Talking about a further 1 trillion in Africa and a further 1 trillion around the world, including people, sort of Brazil, Argentina, and so on. They're all moving Asiawards. So we don't have the influence over them anymore. It's not a situation which, used to pertain where the Americans basically, they would lend you money, even if you didn't need it, so they could control you. I mean, this is well-known CIA tactics. They would bring about regime change. They would think nothing of going into Pakistan without telling anybody, sending the Navy SEALs in, capturing someone they don't like, killing him, and then dumping him over the briny on the way back. I mean, that's what they did with Osama bin Laden. I'm not saying that Osama bin Laden was, deserved any better. But what I'm saying is that was the power of America. That is now no longer the case. This is the big, big change. So the whole of our system, which since at least 1971 has been dependent on paper money, paper currency, credit, coming to an end. It really is coming to an end. So how do you protect yourself? The only thing you can do is to own legal money, not fiat currency or credit. Put however much you think is necessary to preserve your future against these risks, which you can now see, if you care to look, these risks are mounting rapidly. Put some of your resources into gold or silver, I wouldn't bother about copper. That's just it's too small, too small value in terms of purchasing power. But particularly gold, also silver, and then you have got something to spend when the fiat currency becomes worthless. That's what you must do. Think in those terms. So that's my advice. It's not investment advice, incidentally, because
No.
I'm not recommending you buy something to sell it later at a profit. No. Don't do that. That's not a game I play in. It's what we're looking at is protecting ourselves from the collapse of the conventional world of fiat currency investment.
Yeah, and one needs to absolutely do that. Charlie Tremendous Jones. Brian and I got to meet Charlie, and got to know him very well. Remarkable individual. He was American, and just an upfront motivational speaker. But he used to say, in 10 years' time, you'll be in exactly the same position you're in now, apart from two things: people you meet and the books you read. Well, tonight our viewing audience connected with Alasdair Macleod.
Absolutely. People you meet.
Yeah, that's really what we're talking about. An opportunity to, and these people now are better off for it, having listened to what Alasdair has spoken about this evening. Alasdair, where can our viewers go if they want to know more about you and what you have to offer at Goldmoney? What do they do?
Well, basically, if you want to read my stuff, I publish an article on Goldmoney's website, which is goldmoney.com. Hit the research tab. I'm head of research there, and I write an article on precious metals, economics, money, finance, credit, geopolitics. I stay off the political stuff because it's always important to understand that people do have political opinions. I'm not in the business of interfering with political opinions. I really am not. It's really economics. I'm trying to, as much as possible, educate people. So on Thursday, there's an article there. I do write as well a market report on on Fridays. So we're recording this on a Thursday. I've just posted an article. It'll be up later today, and I'll do a market report tomorrow. And basically what Goldmoney do is we store precious metals for people in fully insured, LBMA compliant vaults around the world. So, if you're an American and you're worried, let's say, about storing your gold in a vault in New York, then you've got the opportunity to store it, say, in Singapore or Switzerland or whatever. So, people have different requirements to make them feel safe in terms of preserving their gold and silver. It's not on our balance sheet at all. It's all custodial. Yep. Obviously, we have cash balances and things like that as well. But basically, the precious metals are all vaulted. They are in the name of our customers. And I think it's desperately important that, anyone in the business, as indeed as good as Gold Australia is, makes it absolutely clear that, if we're holding something for you, it's yours. And I think that has got to be the comfort which people get from organizations such as ours and yours.
Fantastic.
No, good stuff.
Take advantage of that. Absolutely.
Yeah.
Jim Sinclair has constantly reminded us that we should do as the central banks do. Not that we're great fans of the central banks, and I'm sure he isn't either, but the important thing here is to learn a lesson from them. They own gold, and we know why they own gold, to give them substance, to give them power and control, to give them influence, and that's exactly the position that you need to be in. Peter Daniels, our lifetime mentor, would say you must have reserves. And you need it in an alternative form of currency. He always talked about gold, and his two sons and his daughter have learnt the lessons that Peter has educated them on precious metals and the ownership of gold and silver. And so they've created a dynasty within that family, haven't they? Which is exactly what we're trying to do. And we think we're succeeding with our family, with our lads. And Egon von Greyer's, of course, Egon, remarkable individual, and we'll be interviewing Egon in a couple of weeks' time. Whenever Egon is asked the question, Brian, how much should I invest in precious metals, what does he say?
Well, I think he's thinking like the central banks at the moment. It's whatever you can't afford to lose. I mean, the central banks last year bought 1,136 tonnes. It was only 10 years ago they were selling the stuff. I think they've changed their mind. They must have read the IMF paper the other day where they says, oh, gold, maybe not the archaic relic that it was supposed to be. But no, whatever you cannot afford to lose, and that's the Darryl's and I principle, that's what we buy in gold and silver.
So if you can afford to lose $50,000, don't put it into gold.
Don't put it in gold.
I can't afford to lose $50,000. No, it's as simple as that. So, Alasdair, thank you so much for your contribution tonight. As always, fantastic input, and we learn so much every time we sit here and talk with you. And I'm anticipating our viewing audience does exactly the same. So thank you again, really appreciative. To our viewers and subscribers, thank you so much for supporting this channel. And so until next time, stay well, stay focused, and goodbye for now.
And goodbye for now.